If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive.
Michael Saylor isn't hedging his bets. To him, Bitcoin is not just resilient, it's inevitable. With governments, institutions, and supply dynamics all aligning, he believes that $1 million Bitcoin is not just a dream, it's a destination. And if that's true, shorting Bitcoin isn't just risky, it's a financial suicide mission.
If he's lucky enough to short the stock below 1x NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out.
Saylor's confidence stems not just from Bitcoin itself, but from strategy's structure. Through instruments like Bitcoin-backed preferreds, strategy can outmaneuver short sellers. They're not cornered by debt or dilution. Instead, they profit from volatility while issuing instruments that never have to be repaid. In Saylor's view, shorts can only win if strategy plays by old rules, and it doesn't.
We're not a holding company or a closed-end trust. We're an operating company. So when we issue, trust can't leverage the Bitcoin. They can't issue preferred shares. They can't issue permanent shares of equity at a premium. We can. Our company's generated a BTC dollar gain equal to about $8.4 billion in the first 2 quarters of this year. That's the equivalent of earnings for a Bitcoin treasury company. Our target for the year is $15 billion.
This isn't passive investing. It's active yield generation on an asset many still treat as speculation. Strategy's BTC dollar gains are treated like revenue, giving it a valuation model closer to a tech company than a trust. The message is simple. This isn't a bet. It's a business.
If the company generates $10 billion of Bitcoin gains this year, you got to put a 10 or a 20 multiple on it, right? So the Bitcoin treasury company operation is worth a multiple of 10, 20, 30, or 40 times the BTC yield we're generating. That's the #1 source of value for the operating business. And then the company also has $60 billion plus worth of Bitcoin. And I would say to investors, look at it that way. A BTC dollar gain is like our earnings equivalent. And then the Bitcoin NAV is the assets on the balance sheet.
Saylor argues that investors should treat Bitcoin returns like earnings and multiply accordingly. This flips traditional valuation logic on its head. Strategy isn't just sitting on assets, it's transforming them into revenue streams that justify and even demand premium valuation multiples.
I think we're in a digital gold rush, and you've got 10 years to acquire all your Bitcoin before there's no Bitcoin left for you. The competition is a virtuous competition. Metaplanet's the hottest company in Japan right now. They went from 10 million to $1 billion market cap to a $5 billion market cap. They're going to raise billions of dollars. They're going to pull the liquidity out of the Japanese market. So they'll be raising capital in Tokyo and the Tokyo Stock Exchange. Obviously, none of the rest of us are trading or selling equity in the Tokyo Stock Exchange. So it's not competitive. It's cooperative. There are companies coming public in Brazil right now, like Orange BTC, that'll come public in some time frame.
What's happening now isn't a bubble, it's a scramble. Across continents, companies are tapping capital markets to fuel Bitcoin accumulation. According to Saylor, this isn't a war. It's a rush, a competitive yet collaborative sprint to accumulate a finite asset before it disappears into vaults for good.
Our company is a very particular business model. It's to issue Bitcoin-backed credit instruments like Bitcoin-backed bonds and especially Bitcoin-backed preferred stocks. We're the only company in the world that's ever been able to issue a preferred stock backed by Bitcoin. We've done 3 of them in the past 5 months. We're not competing against the Bitcoin treasury companies. We're competing against ETFs like PFF that have portfolios of preferred stocks or corporate bond portfolios that are trading as ETFs in the public market.
Instead of battling ETF giants head-on, Strategy built something Wall Street can't easily replicate: high-yield, high-liquidity instruments with Bitcoin backing. It's not just about owning BTC. It's about creating financial products that extract value from Bitcoin's performance, turning it into something active, scalable, and irresistible to yield-hungry investors.
The convertible bond market normally is a short duration investor. They want to hold the bond 3 or 4 years, and the calls that are embedded in the bonds are capped calls, capped at 130% of the strike, of the conversion price. And so that's a short duration call investor and a short duration credit investor. What we sold with Strike, STRK, was a perpetual call option, good for 100 years or forever. And then we sold a perpetual dividend you could hold for 100 years and give to your grandkids. So long duration credit, long duration call, and that preferred never comes due for us.
Strategy isn't selling bonds with a ticking clock. It's issuing century-spanning instruments designed for long-term conviction. That's not just appealing to investors, it's terrifying for short sellers. There's no expiration date for Strategy's belief in Bitcoin, and no maturity date for its financial engineering.
When you buy one of our preferreds, like Stride is yielding like 11% plus right now, and Strife is yielding 9.5%. You buy that, it's all QDI eligible. It's trading 10 to 50 times more liquid on a dollar for dollar basis. It's very homogeneous credit, and you get an extra 400 basis points of yield, better tax treatment, etc. So we're actually competing against that. We're offering tax-efficient, zero-fee, fixed income yield.
Here, Saylor drills into the Strategy's most powerful advantage: performance. Strategy's instruments beat traditional ETFs in nearly every measurable category: yield, tax efficiency, liquidity, and transparency. It's not just about believing in Bitcoin. It's about giving investors a better way to access its upside.
The typical person might do 10,000 transactions in their lifetime, maybe 100,000 if they're very busy. The AIs are going to do 100,000 transactions a minute. They're not going to suffer the existing credit systems and the existing banking systems of the 20th century. They're going to want to move digital money at high frequency at the speed of light. That means digital assets like Bitcoin over the Lightning Network or via layer 3 protocols. The demand for digital capital, which is what Bitcoin is, and digital networks like Lightning and like all of the crypto protocols that are being worked on right now, is going to go through the roof. So I think AI is really a demand driver for Bitcoin. It's going to accelerate the entire digital assets economy.
Artificial intelligence won't just change how we interact with money. It will redefine what kind of money works. In a world where speed, trust, and programmability matter most, Saylor believes Bitcoin has already won. AI, instead of threatening crypto, will become its biggest customer. So what happens if you short Bitcoin? If Michael Saylor is right, You don't just lose money, you risk financial extinction. From billion-dollar Bitcoin buys to revolutionary financial instruments, strategy isn't merely betting on the future, it's building it. With governments endorsing, competitors rushing, and financial markets evolving, Saylor's message is clear. Bitcoin is no longer a rebellion, it's infrastructure.
I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin. The price will go to the moon. That will be good for the entire crypto economy and beneficial to everyone that holds any BTC-backed equity or
Right.
credit-based instrument.
Well, I'm still thinking.
Do you think Saylor's vision will come true, or is there still a flaw in this Bitcoin-first strategy? Let us know your thoughts in the comments below.